Everywhere I look, I see fears of recession. We're currently in a stock market correction. The NASDAQ is down 15%. Some of my favorite stocks are down 20 to 30%. What is going on? Today, I want to make sense of it and tell you all why I'm buying stocks during this dip. Hey, what's up, guys? Welcome back to another one. The stock market has been very red over the last few weeks. This makes a lot of sense if you've been paying attention to the news. Again, we've got Trump tariff worries, we've got recession worries, we've got fiscal austerity in the government. Doge is hacking government programs left and right, and a lot of people are worried. What is going to happen? We really haven't seen this before. And so when there's uncertainty introduced into the market, usually stocks are found at a discount, and that is exactly what we've been saying. When Trump first got elected into office, people were thinking, oh, he's going to cut a bunch of regulations. This is going to be just like Trump 1.0 back in his previous term, where he cuts a bunch of regulations, a bunch of companies make a lot of money, and he's going to use the stock market as the basis for success in his term as president. But today we're seeing literally the exact opposite, where he's putting all of the hardballs up front, all of the things that you can do to the economy that would put it through rough times, he is doing up front to start out. And so it's really interesting to see the difference between his first term and second term. But what's important is, despite what he's doing, despite the tariffs, regardless of what side of the political aisle that you fall on, we need to think logically about this. We need to remove ourselves from the situation and discuss and conclude exactly how this is going to affect our portfolios and the stock market as a whole. What do we need to look out for? What do we need to be ready for? And most importantly, what do we need to change about our portfolios to manage the situation that's ahead of us? However, if we're going to ask all those questions, to answer it, first I want to talk about why stock prices change. I think that's the fundamental basis of what we're talking about right now. And without an understanding of that, I don't think that we can really go deeper. Now, stock prices go up and down. And there's three main reasons why they do go up and down. When you look at a stock price, when you look at the share price of a stock, when you look at the valuation, the market cap of a company, that number is a representation of how much money that company makes. And so when a company begins to make more money, the stock price will go up. When the amount of money that company declines or contracts, the stock price will go down. So top line revenue growth is the only real true growth when it comes to a stock. And what I mean by that is, it's one thing for a multiple to expand because of higher expectations or something like that, but a company is truly only valuable if it makes an amount of money that justifies its price. Okay, so if you have a super high price and the company is only making a little bit of money, there's a mismatch there. If it's making a lot of money but there's a low price, that's called value investing. So that's the first reason, is that earnings and top line revenue growth will definitely drive the stock price higher. However, what we're seeing right now is the second point, which is the economic events that are affecting stock prices. Every month when the Consumer Price Index comes out, which is CPI, and tells us how much inflation there was in the previous month, that's what we're looking at when we're thinking about economic events like inflation or interest rates. When the Fed cuts or hikes rates, that affects the stock market, right? If you raise interest rates, that increases the risk-free rate that you can get in a bank account or in a money market account or in bonds, and therefore stocks look less attractive, especially ones that are not high growing, especially ones that are barely beating that risk-free rate. So if our risk-free rate is around 4 or 5%, why would you want to invest in a company that's only growing 4 or 5%? It doesn't make sense. And so that'll negatively impact stock prices as interest rates increase. Now, the third, and I believe the most important aspect to why the stock price changes, is because of investor sentiment and market psychology. This is a day-to-day thing. The stock market is simply a reflection of what people are thinking at any given moment. So if you look at a stock price and it jumps up 20% in a day, that's because people think it's worth 20% more. Or so many people are buying it that it jumps 20%. But people are only buying it because people think highly of the company, or more highly of the company than they did the previous day. And so what the market tends to go through are these fear and greed cycles. So sometimes, and we kind of just saw this a few months ago, you go on CNBC and everybody says the same thing, right? They say, wow, this market is just going to keep on running. It's going to go to the moon, yada, yada, yada. Or, in contrast, we have events like in 2020 during the COVID-19 pandemic, the market crashed somewhere between 30 and 40% in a matter of, I think, a week or two. That's when sentiment was terrible. Everybody thought that we were going to go into this recessionary period. It was going to be really long and drawn out, and it ended up actually being a really great time for stocks. Today, what we're seeing a lot of is impacts from both market psychology, sentiment, and economic events that are happening because the White House is putting new policies in place, right? We have tariffs going on Canada and Mexico and China. I saw today that Trump was threatening a 200% tariff on beer and wine, I think, from Europe if they continue to tax our whiskey. Very, very interesting stuff going on. And so there's a lot of uncertainty in the market. People don't know how these tariffs are going to affect us long term. The fact that Elon Musk and Doge are cutting so many government jobs, people don't know what's going to happen there. How is that going to affect unemployment? How is that going to affect our GDP? Is the thought that cutting government jobs and allowing these jobs to actually get moved to the private sector, is that an actual logical thought? Is that actually going to happen? Or is that just some pretty theory that this administration has put on paper? Now, one important thing to consider during this entire situation is the Fed is on our side. The Fed does not want us to go into a recession. So we got Jerome Powell at the helm, and he has said time and time again that if required, if necessary, the Fed will continue to cut rates to loosen the money supply and to allow Americans to see a little more growth in their economy. When the money supply is loosened and the cost of borrowing money goes down, companies are able to borrow money for essentially nothing and able to scale their ventures and expand their businesses a lot faster for a lot cheaper. And so Jerome Powell currently has, I think, 425 basis points to work with. And so he's not afraid to use it. And a lot of people are now expecting a rate cut in the coming months. What this table is showing us is the impact on the stock market 3 months, 6 months, and 1 year after the Fed initially starts cutting rates. And so the first column over here, the 3 months after the first rate cut, I'm not really concerned about that because I'm a long-term investor, right? I'm thinking a very long time horizon. 6 months, still not long enough for me. But 1 year, that's when I start to consider the impact of the rate cut. If we look in that right-hand column, there's a lot of green there. There's a lot of green. That's very hopeful, right? So when the Fed cuts rates, on average, the stock market will go up 4.9% from its current level. So it's very, very promising. And it also just reinforces the fact that Jerome Powell, the Fed, they have this tool at their disposal. And if the tariffs really start causing our economy to slow down, the Fed can reignite some momentum by cutting rates. And hopefully that will reflect in the stock prices over a long period of time. Now, I don't know if you've been watching the news lately, but there is panic in the markets. There is red all over the place. Some of my favorite stocks are down 20 to 30%. And just read the headlines. Every single headline is like this. We've got recession fears are rising. The U.S. economy went from a booming to a recession in only 20 days. And so this is really the headline that I want to pay attention to, right? All these other ones, recession fears, turbulent day amid trade war, anxiety about a recession. But this headline right here is one that really just marks for me how ridiculous this all is. The U.S. economy went from booming to a recession scare in only 20 days. Guys, I don't think it's that deep. I find this ridiculous. Here's the thing. I can't predict whether a recession is coming or not. Actually, I guarantee you in my lifetime, I will experience a recession or two, or who knows, maybe 3, maybe 10. I know a recession is coming, but I can't tell you if it's going to come in 1 year or 5 years. And so when I look at headlines like this and I see the U.S. economy went from booming to recession scare in only 20 days, there are too many people out there in the markets right now. Too many people running hedge funds, too many retail investors who are so panicked over the news coming from the White House. They're selling their shares, these poor schmucks. They're selling their shares to guys like me who are willing to buy them at a very steep discount. So if nobody can time the market, if nobody is able to truly predict a recession, why are people selling? It's all psychology. This is what I said at the beginning. Market psychology and investor sentiment is what's going to drive the stock prices higher or lower. And this is exactly what we're seeing. Too many people are panicked. Too many people are running around like chickens with their head cut off, thinking, oh my gosh, the sky is falling. President Trump is doing all these crazy things that I'm not used to and America isn't used to. Whatever, man. Whatever. Like, calm down. I say this over and over in all my videos. The mark of a good investor is having good temperament. It's not getting excited when the stock price goes up. It's not being sad or disappointed when the stock price goes down. It's having a giant bloodhound sniffing nose where you can go and find deals in the stock market, where you can double down on your positions and you can be confident in your research, right? Fundamentally, there's nothing that's changed with these companies. With all the companies in the stock market, there's nothing that's changed over the last 20 days. And yet here we are, the average stock down 20 to 30% in the stock market. For what? There's been no fundamental shift. It doesn't make sense to me. Now, I know that people are anticipating a giant shift. I know people are anticipating a slowdown. But how do you know what companies are actually going to slow down? How do you know that this is going to be a market-wide slowdown? How do you know that the AI companies are going to slow down? How do you know that the consumer staples are going to slow down? It doesn't make sense to me. We can't predict what's going to happen. We have to wait for the earnings reports. We have to wait for some source of information to tell us that something has fundamentally changed about the companies that we've invested in, so then we might want to sell. Maybe that convinces us to sell. But even then, one rocky quarter, two rocky quarters, is that really enough for you to sell an amazing company? I think most of the companies in the S&P 500 are able to weather a small storm from tariffs. And so this brings me to my main point of the video. Money is made in uncertain conditions, right? There's the famous quote, be fearful when others are greedy. Be greedy when others are fearful. And right now, the fear index is through the wazoo, man. Everybody's scared. Everybody's hiding their kids, their wives, putting them in the closet, bringing out their shotgun, and they're like, Trump's got tariffs. We might go into recession. I don't know what's going to happen, but I'm going to sit here and sell all my stock. Why? Ladies and gentlemen, if you can't handle turbulent times, don't be in the stock market. Go into bonds. Go into real estate. If you don't have the stomach for this type of market, if you can't handle the heat, get out of the kitchen. You should not be invested in individual stocks if this is a time where you're panicking. When you see your favorite stocks down by 20 or 30%, that is a discount, brother. It is a flea market sale. Go out, get a job, get some extra money, and throw that joint in. You do not need to panic, brothers and sisters. This is the U.S. This is the United States of America. We are going to recover. No matter what a president can throw at us, no matter what an administration can throw at us, good or bad, we weather the storm. This is the United States of America. You have to believe in this country. You have to believe in the companies and the economic environment that we're in, that no matter what, we as Americans, as an economy, will come through bigger, badder, and better than ever. When uncertainty comes in, when uncertainty creeps into your mind, just remember, the true investors, the real titans of the investment world, they don't bend at the will of the herd mentality. They go forth, they conquer, and they buy the undervalued stocks where they see them. That's what we need to do as investors. Now the question becomes, well, Alex, how do I buy the dip? What are you doing to take advantage of this situation? The first thing that we need to go over is the fact that nobody knows when the bottom of the market is going to happen. Nobody knows when we're falling right now. We don't know when we're going to bounce and just keep going up forever, right? Nobody knows that. The other point is nobody knows the top, right? Nobody knows when the market's going to top. We can't time it. It's impossible to predict. There are so many little factors. Our world is so complex. No human brain you would need to be God himself to be able to predict these things. And at that point, you wouldn't even be predicting. God is outside of time, man. He owns time, right? So he already knows when these things are happening. We can't. We're mere mortals. So the only thing that you can do in situations like this is buy the companies that you love, buy the companies that you understand, buy the companies that you believe in at valuations that you feel comfortable with. When you see stocks at a steep discount, your first reaction should be, okay, what is this company worth? What is the fair market value of the company that I'm in love with, right? For NVIDIA, I think the fair market value is somewhere between $160 and $170. Right now, NVIDIA is at 110, 115. That is a steep discount. That's a 30% discount. Why wouldn't I be comfortable with a 30% margin of safety? CrowdStrike the other day fell down to $300 a share. CrowdStrike is easily worth $380, $400. Why would I not feel comfortable buying at these valuations? You have to look at the company, and instead of looking at the direction the stock price is going, you say, what is the company worth? What is the price at? And what's the difference between the two? Is it at a steep discount? Is it right at fair market value, or is it above value? And sometimes when a stock crashes by 20 to 30%, it's still overvalued. So you need to keep this stuff in mind. When situations like this happen, all I do is I put money into my brokerage account and I continue to buy the high quality growth stocks that I know and love. And that's just what I did. I sold 50% of my current stake in Apple at $240. I got a little bit lucky there because now I think Apple's down at $220. So I saved about 10% on that. And Apple went from 4% to 2% of my portfolio. So now it only has a 2% weighting. I bought CrowdStrike. CrowdStrike was down 27%. I saw it at $326 and I thought, oh my goodness, this is a steal. I was so happy to see this. Now, I added about 3 to 4% to CrowdStrike, and now it's 19.8% of my portfolio, a highly concentrated position. And the reason I thought that CrowdStrike was pretty cheap right now is because its forward price to sales is at 17.78, which is below 20, which is right in my range of comfort for this company. Now, what's interesting is after I bought CrowdStrike, it went from $326, and it dipped down to it was like 303. And so, yeah, when I saw this jump from 326 to 303, was I a little sad? Yeah, I was a little sad. I wish I had known that I could just wait till tomorrow and buy it for another 10% discount. But there's only so many things I can control in this life, right? But the next day, CrowdStrike jumped up, and now it's in the 340s. So I really can't complain. Again, you can't time the market. You can't be disappointed with your entry price. All you can do is feel comfortable with the decisions you're making based on the valuation of the company. The last thing I did is I bought some more NVIDIA. Now, I know what you guys are thinking. Dude, this is already like half your portfolio. Why are you still adding more? Because I believe in the company. I love NVIDIA. I am cautiously optimistic about NVIDIA. I think NVIDIA has a great future ahead. I think that only one of their markets is really tapped into, which is the AI data center market, which is, by the way, growing at astonishing rates. And so if I believe in the company this much, why would I not add to it when it drops from $150 a share down to $113? I was so excited when I woke up and I saw $113 as the share price. So I added just a little bit, probably 1% to NVIDIA. NVIDIA was at a forward PE of 25, so I was very comfortable with that valuation. I think NVIDIA deserves a PE of probably around 40, so there's some pretty heavy multiple expansion that's going to come in there. But worst case scenario, even if the PE comes down to a 30, I'd be very happy with that. And I still feel comfortable with that. Even if it stayed at a 25, NVIDIA is growing at a very rapid pace, growing at 30% a year, I really have no issues with buying at $113. Now, time will tell if I was right or if I was wrong, Or maybe all of these companies are still overvalued. Maybe I have a lot to learn as an investor. Maybe I don't know how to evaluate my companies. Time will tell. But this is the strategy that I've been using for 6 years. And this is the strategy that I'm going to continue to use for another 6 years. Unless somehow the stock market proves me wrong, I will continue with my investment philosophy. I will continue with my way of doing things. And hopefully it all turns out for the best. Now, I hope you all enjoy the discounts in the market. Enjoy the rough roller coaster. This is what investing is all about. This is where the real investors are made. I hope you all have a wonderful day. And if I've earned it, please consider subscribing. Thank you all. Have a good one.